setting and maintaining profit margins, managers have a number of ethical responsibilities. In this video, we will look at some of these ethical considerations in depth. But before we dive into that, let's first define what a profit margin is. A profit margin is the percentage of each dollar of revenue that a company gets to keep as profit after expenses are taken into account. It is found by taking the net income and dividing it by total revenue. A high profit margin can be a sign of efficiency and health for a company, but the means by which this number rises is of major ethical concern. Managers must maintain fairness to the company and its employees, but also to the customers. It is a rightful stewardship of goods to make sure the company is profitable and production can be reasonably maintained. The Lord has given companies resources, and it is necessary for them to use them well. However, it is also necessary to consider who must pay the price of increased profits. More money cannot come at the cost of quality, the product, or working conditions for employees. For example, let's take a look at the fast fashion industry. This industry often utilizes labor in other countries to increase their profit, and this practice is undeniably unethical. They have opted to use drastically underpaid workers or even children to make more money on the low quality items that they are mass producing. In addition, if a company produces a product such as necessary medicine for their customers, any excessive rise in profit is not considerate to those they are serving. When it comes to goods that people need to survive, a company must consider the impact a greater profit margin will have on their customers. If greed is the motivation, the action is unethical. Managers must consider why they are acting the way that they are. If a company were to look at this issue from a biblical view, a couple verses might come to mind. The first being Proverbs 29:14, which states, "If a king judges the poor with fairness, his throne will be established forever." We are to serve others, and companies should only be an extension of that principle. Furthermore, 1 Corinthians 4:2 puts it simply, "Moreover, it is required of stewards that they be found faithful." A company should be honest with the profits they need, fair to those who need their product, and a good steward of all the Lord has blessed them with. These are just a few considerations that companies can make when they determine if their profit margins